Good morning, everybody. It is Mike Wise from CMG Home Loans with your weekly mortgage update. And today we've got the Olympics starting. So go USA on that. But now let's get into the mortgage news. So, investors, you are looking at investment properties, then you should be looking at our cash flow, investor cash flow product. It's called debt service coverage ratio loan. And basically, those rates have come down a little bit now. And so you can get into a house with absolutely no income on that. All you have to do is make sure that the rents will cover your principal, interest, taxes, and insurance. So great loan if you want to buy an investment property to kind of without any income documentation whatsoever. So what happened this week? As far as inflation, the Fed's favorite measure of inflation did come out today, and the headline numbers were basically year over year went from 2.6 down to 2.5, 2.51% month over month. It was at 0.08, and the core actually just stayed pretty level at 2.6 to 2.63%. So the shelter and rents and owner equivalent rents, those are starting to come down a little bit. So last week we reported those were kind of a big piece of the CPI, the inflation numbers. But basically these inflation numbers, the Fed's favorite, they're meeting next week, and that opens the door even further for a rate cut in September. So is it going to be a quarter? Is it going to be a 0.5%? We'll see. So hottest job market. This is next week is the jobs numbers. So that's going to be the big stuff next week along with the Fed meeting. But it looks like the job market is slowing down. And so one article I was reading in the Wall Street Journal, basically, frankly, this is a quote from Nick Bunker. Frankly, I'm not sure that the labor market was ever sustainable. It was built on the back of huge COVID shock. It was amazing to see, but it was never going to stick around long. So that's something that is a big statement there. The boom times were fun while it lasted. Wages soared as employees fought for workers during the nationwide labor shortage, peaking at a year-over-year growth of 5.9% in March of 2022. So started to see the jobs market not be so hot, and the numbers, well, they probably were overstated. So next week, the Fed meets, and the chances of them actually lowering the Fed funds rate in the July 31st meeting, it went up a little bit, but it's only a 7% chance of having a rate cut in the July meeting. But there is 100% chance of a cut in September. And basically, the probability of a 50 basis point rate cut went up to 14%. So I wouldn't be surprised if they did do a surprise. The word is that they're going to do a 0.25% in September, but it may go down a full 50 basis points because the Fed, they're behind the eight ball here. The economy is not doing as well as they thought. And so we'll see what they do. But September 18th, right around the corner here, and we'll see what they do at that meeting. November 7th, there's a 100% chance of them being lowered. December 18th, 100% lower as well. So it will have, they will go down. So what's happened with the yields and the treasuries, the prices? Well, they were waiting for today's numbers, the PCE numbers, to come out. And during the whole week, they kind of went down. Rates went up a little bit. And just today, as they announced the PCE, the inflation numbers, we had a market rally. The yield went down to 4.21%. And it came back down. So same thing on the yield. It went up and up and up, just waiting, anticipating for the numbers to come out with the PCE. And the rates have come back down a little bit. But as you can see, the mortgage rates, they were at 6.81 last week. They went up to 6.91. So they're relatively flat, but went up a little bit here. That's why I got it in the red. And so I anticipate they'll probably be coming down next week, especially if those job numbers do not stick. So sorry about that. Comparison purposes, we're at 6.9%. A year ago, we were at 7%, 6.99, and the high of 8%, a low of 6.61 in December of last year. So existing home sales this week, they fell again. So the last 2, 3 months, 4 months in a row, the home sales as far as the number of units has gone down. However, the median sales price rose 1.8% month over month to $426,900. Again, that's not California for sure, but that's nationwide. So that is a new record for housing prices. So housing prices still going up. And if you look at the number of offers received on each house, it's a 2.5 to 3 offers received on each house. And there 30% of the properties are being sold at above list price. So if you see a house for sale, it's a good chance it's going to go above the list price because you're having multiple offers on it. So lots of people looking for houses still. Inventory is still really, really, really low. And so everybody's waiting for those rates to come down a little bit. So we'll see what happens. This is Mike Wise. This is your weekly mortgage update. Have a great time watching the Olympics. I will be around this weekend, and we'll talk to you next week. Thanks a lot. Talk to you soon. Bye-bye.